All right. Good afternoon, everyone. Thank you for joining us. I'm Stacy Langford with the Tennessee Bankers Association. Excited to have some of the team from Nelson Mullins with us today. We have Sabrina Conyers, Jeff Gurney, and Mark Miller. They're going to discuss the ins and outs of CDFI. In the last couple months, we've heard from over a dozen Tennessee banks that have been interested in the process of becoming a CDFI bank to take advantage of some of the more recent benefits established by Congress. So we're going to talk about the benefits for a bank of being a CDFI, the process, and the advantages. And with that, I will turn it over to Mark Miller.
Thanks, Stacy. It's really good to be here today. You know, I talked to Colin a couple of weeks ago, and he reiterated what you said, how many folks have been calling recently and asked if we did any of this type work. And I said we do, and if we'd be willing to put on a webinar. And I said, of course we would. And I found a few people smarter than me to help me out with like my partners, Sabrina Conyers and Jeff Gurney. So I'm going to turn it over to them very quickly. Sabrina is in our Charlotte office. Jeff is in our Greenville office and do a lot of tax work and other areas that kind of bump into and overlap with CDFIs, and both have significant experience in dealing with these institutions. So without further ado, I'll turn it over to Sabrina and Jeff. And I think we have plenty of time once we get through the presentation to answer any questions. So if folks want to pop questions into the chat as we're going through, we can kind of use that to lead the discussion after the presentation. So with that, Sabrina, Jeff, I'll turn it to you.
Thanks so much, Mark. Thanks for the introduction, and we're really happy to be with you all today. Jeff Gurney is going to get started kind of talking about the specific benefits to banks of a CDFI designation. And then we will move on to kind of talking a little bit about some of the programs available through becoming a CDFI. And we'll also talk about the eligibility requirements, and then at the end, kind of talk a little bit about some alternatives to CDFI status, including partnering with CDFIs to expand a bank's programs. So Jeff, you want to go ahead and get started?
Yeah, it's great to be here. Thanks for having us. So the big benefit when we talk about CDFIs, there are various types that are out there. There are banks that are CDFIs, there's credit unions, there are non-traditional lending institutions or depository institutions out there that are CDFIs in general. But really the big benefit to a CDFI bank is that the bank is exempt from the ability to repay rule, which in effect means that the bank is not going to have to meet the QM test for issuing loans. The bank essentially is given the benefit of the doubt that it's going to give loans that are in the benefit of the community. So a bank that is a CDFI is just exempt from having to comply with the main rules. Now, there are some little components that may apply, for example, on prepayment penalties, but generally you're exempt from the ability to repay rule, and then you, of course, don't then need to meet the QM test. Intangible benefits, when we talk about this, are regulators more trusting of a bank that has a mission of promoting community development? The answer for what we've seen and what our colleagues have seen is, the answer to this is generally yes, that the regulators tend to look more favorably upon CDFI banks than a bank that isn't a CDFI. So those are really the big benefits to a bank in becoming a CDFI. Now, there are numerous award programs that exist out there that apply to all types of CDFIs. There are some that work better for banks. For example, a bank enterprise award, and this is a list of some of the types of awards you can do as a CDFI to get additional access to low-cost capital, or in sometimes grants. We've got technical assistance awards. We'll talk about those, financial assistance awards. And there's a list here, and in some of the COVID relief bills, there have been some additional capital put in that you can get at as a CDFI, which we will conclude with. The first award really, when we look at here, is a technical assistance award. This is, and really our idea here, just to give you a little bit of introduction, is we'll talk about the benefits of CDFIs, and then after that, we'll talk about how a bank could consider being a CDFI, but I think it's helpful for you to see the reasons why you might consider that before getting into the legal description of those rules. Technical assistance awards can go to existing CDFIs or entities that are certifiable CDFIs. So an entity that could be a CDFI or is on the road to being a CDFI. And this is essentially to allow for the entity to build its organizational capacity. And you can see here a list of examples of how this money is used. From a statistics standpoint, this is what was given in 2020 as technical assistance awards. There are 127. You need to apply for these. There were $15.8 million of awards given. And you can see that 3 banks or bank holding companies qualified for these technical assistance awards or got them. There might have been more that qualified that just didn't apply. The other type of big awards we see are the base financial assistance awards. And this is to help sustain or expand financial products and services. Typically, you've got to go and match the funding. So you'd go and say, I've got funding from a non-federal source, and you'd have a match with the federal source. Again, you can see the examples here for what the capital you'd receive from these awards can be used for. There are other types of financial assistance awards listed down below that sometimes banks qualify, especially the PPCFA, banks can qualify there. Here's some statistics on these awards. For 2020, we had 127 million given out here. 33 banks or bank holding companies got awards on under this program here. The next award is the bank, and Sabrina, if you want to take over, feel free to jump in. The Bank Enterprise Award, these are awards given really only to FDIC insured depository institutions. It's given for really 2 purposes. Sometimes when we're representing CDFIs, we tell a CDFI to go find a bank partner. And we'll talk later about how a bank can partner with this existing CDFI, but we'll tell them to go find a bank partner. The bank gets awarded the Bank Enterprise Award, and then the bank can use it to invest into the CDFI, or it can just use it for its own consumer and commercial financing. Again, you can see 25.2 million was given to organizations in 2020 through the Bank Enterprise Program. Yeah.
Oh, go ahead.
No, I was going to say, this is a good time for me to hand it off to you.
Okay, sure. So the next award is the CDFI Bond Guarantee Program. And so generally CDFIs are able to apply to the fund for authorization to really issue a minimum of 100 bonds worth of $100,000, $100 million, excuse me, in total. So the Secretary of Treasury would provide 100% bond guarantee on those loans, and they would have a maximum maturity of 30 years. And so this is generally provides kind of long-term credit at more below market prices or rates, but this is another program that a bank that is certified as a CDFI would be able to qualify for. On the next slide, we talk a little bit about new markets. And so the new markets tax credit program is also another benefit of having CDFI designation. For those who may have heard of but don't know much about new markets, generally that program, it was enacted in 2000, and it is really a tax credit program that's implemented under Section 45D of the Internal Revenue Code. And so the New Markets Tax Credit Program allows a 39% tax credit to be available to investors and that credit is taken over a period of 7 years. And the credit is equal to 5% of the qualified equity investment that will be made into a community development entity. It's 5% for the first 3 years and 6% for the last 4 years, but the overall credit is 39%. And if you'll flip to the next slide, Jeff, when we're talking about new markets, basically a CDFI, an entity that's certified as a CDFI can automatically qualify as a community development entity or a CDE. And the way that the New Markets program works is that an investor that is investing to claim those credits will be eligible to claim the credits after it makes its equity investment into a CDE. So oftentimes you'll see CDFI entities as let's say, nonprofits or either banks that are, participating in this program. They could be a CDFI that's a certified CDFI that then becomes a CDE and then is eligible to take in qualified equity investments and participate in these new market tax credit structures. And the benefit to the bank is really that it helps you to be able to lend this low cost capital to customers in your area, but then also allows it to be another mechanism for generating fees because CDEs receive certain fees from participating in new markets type programs. Next slide, please. With respect to, or recently as kind of a part of COVID under the Consolidated Appropriations Act, the government has also instituted this Emergency Capital Investment Program. And so this program was really created to encourage investment by banks and particularly CDFIs in low and moderate income communities. And so under this program, Treasury is providing up to $9 million of $9 billion, excuse me, very big difference there, $9 billion in capital. And that's going to be deployed directly through CDFIs or minority depository institutions. And it allows those institutions to provide grants, loans, forbearance for certain small businesses and minority owned businesses, and specifically to just kind of expand their offerings really to customers who may be designated as low income or who may be in underserved communities. Treasury has set aside, particularly under this program, $2 billion specifically for CDFIs and MDIs that have less than $500 million in assets, and then an additional $2 billion for CDFIs and MDIs with less than $2 billion in $2 billion in assets. So now we're going to kind of talk or move to talk a little bit more about the eligibility requirements for becoming a CDFI.
Yeah, and I think my quick finger sort of skipped over this slide, and this is a rapid response program, and unless you are a CDFI, it's going to be almost impossible to get this because I think the application must be submitted in the next 2 weeks by existing CDFIs, but this is an example of if you are a CDFI, when situations arise, Congress will make money available, and just by going and getting CDFI status already, you will be prepared for future, hopefully never a pandemic again in our lives, but future tragic events that occur or just congressional spending. And so this is just one example here. Now, the eligibility requirements, what we have is, so what is a CDFI? Well, basic definition, it's just an entity meeting the requirements of this section of the banking regulations. And really there are 6-part test here. They have to meet a primary mission test, be a financing entity. That's going to be easy for every bank to satisfy. Serve a target market. We'll get into some more detail about target markets and how a bank could meet that. Provide development services. Really, we're looking here at wraparound services of some sort, whether it's financial literacy, and we'll talk about that a little bit. Meet the accountability requirement, which typically be accountable to the community and not be a government entity. So I'll start with the primary mission test, and what the mission has to be is promoting community development. And the CDFI fund's going to look at the bylaws, it's going to look at the articles of the entity, and it's going to say, what are the purposes of this entity? And does it have the purpose of improving the social and economic conditions of underserved people, or residents economically distressed communities? And we'll show you, we've got a map later on that shows you where these communities are coded in Tennessee, to just give you an idea of how broad the CDFI rules are. CDFI, again, has to be a financing entity. It's got to be predominant business activity as the provision of financial products and financial services. For some CDFIs that Sabrina and I work with, this is a little bit of a factor we'll focus on, just because depending on the type of product they offer, they may or may not qualify as a financing entity. For a bank, this is probably the easiest factor for y'all to meet. And so with that, I'll hand it back to Sabrina to talk really about the target markets and the investment areas.
Thanks, Jeff. Okay, so for the target market, so generally, of course, a CDFI must choose a target market to serve. An entity is going to demonstrate that it meets that requirement by proving that it provides either financial products or financial services in certain investment areas or to particular target populations. So the definition of an investment area is going to be an area, of course, it's located within the US. It'll be an area of economic distress with significant unmet needs for loans, equity investments, financial products, or financial services. And an area that generally encompasses or is located within an empowerment zone or an enterprise community. When we speak about the economic distress requirement, so that definition will be met if the percentage of the population living in poverty is at least 20%. Additionally, if in the case of an investment area that's located within a metropolitan area, then there you're kind of looking to make sure that the median family income is at or below 80% of AMI. At or below 80% of that metropolitan area's median family income. So you're specifically kind of looking at that area and determining the 80% rate based on that area. And then outside of the metropolitan area, then you're looking at, you're looking for the median family income to be at or below 80% of the median family income of the state. So looking statewide. Generally, in an area of economic distress, the employment rate would be at least 1.85 times the national average. And then there are different, also for counties that are located outside of the metropolitan area, the county population, when you're thinking about kind of the, if you're looking at counties that are located outside of the metropolitan area, you kind of look at over a 5-year period, the county net migration loss during that period in kind of trying to determine exactly what the population of the census group that you're looking at is. So you're kind of looking over a 5-year period to determine these thresholds. Let's see, for the target market. So for the target market, remember we said there are two definitions. You're either looking to invest in a certain investment area, or you're looking to choose a targeted population to serve. So generally, in this case, an entity that directly or indirectly targets individuals or a group of individual people who are low-income persons or lack the adequate access to financial products or financial services in that target market, right? So you're looking to kind of designate a population within the market that kind of meets those criteria. Again, of course, those people must be located in the US or in US territories. But when you're thinking about low-income persons, you're generally looking at the definition of low income with the following meaning. So you're looking to the income, the adjusted for family size of not more than, again, 80% of the area median income, which we were kind of discussing before in the investment area, or for non-metro areas, it's similarly 80% of either area median income or 80% of the statewide non-metropolitan area median family income. As Jeff had noted, the CDFI actually has a mapping tool. So if you were to go into the CDFI fund's website, or really actually just Google CDFI mapping tool, you will pull up the map for CDFIs, and you can put in the zip code that you're in, and then see kind of whether or not the targeted your area kind of meets the targeted population test or the target market test that would be needed in order to meet the CDFI status. So it kind of does the work for you and allows you to just put in your zip code, and then the green areas are the areas that qualify. Jeff, do you want to talk a little bit about development services?
Yeah, sure. And so, right as you said that, my dog started barking. Sorry if you hear that. CDFI, one of the requirements of being a CDFI isn't that you just provide loan products or financial products. It's also that you have to do a little bit more. And you got to have a development services program, and you either do this development service program or you contract for it to be done. And examples include financial or credit counseling, home ownership counseling, and business planning and management assistance. And these types of development services can be met. And a lot of banks might already be able to meet these through their loan programs anyway. And the next is the bank's got to be, and one of the big things to think about here is the bank's got to be accountable to whatever its target market it chooses, it has to be accountable to that market. So either you pick your investment area, you need to be accountable to that investment area, or if you're going after a targeted population, you have to be accountable to that area. Now, this is typically done one of two ways. Either you put members of your target area on your governing board, which for a lot of CDFIs, that's just may not be practicable or practical. So what you end up doing is you'd create an advisory board, and you'd have the target population or the members from the investment area sit on the advisory board and provide advice to the governing board, but not in control of governance of the entity at all. And so that would be accountability. And then I'm going to hand this back to Sabrina to talk about some of the partnering with CDFIs we've seen. And this is sort of, the bank doesn't become a CDFI, it partners with a CDFI out there. So with that, Sabrina.
Sure. Thanks, Jeff. And so just to kind of wrap up just going back to the eligibility requirement. So one of the other major eligibility requirements is that the entity that's applying, not be a governmental entity or be controlled by the government. And so, of course, that's not a criteria that here would apply to banks. But that's one of the other kind of very important considerations, especially if a bank were to kind of decide to to try to do this through creating some sort of other nonprofit entity or other joint venture entity that could qualify for CDFI status, or could apply to be certified as a CDFI. That would be another piece of the criteria that needs to be met. So when you're thinking about just generally applying to become certified as a CDFI, once you've done your analysis around the structure that you want to use, if it's going to be your existing bank, then kind of looking through the eligibility requirements and make sure you understand how you're going to meet those tests, then the applications can be submitted year-round on the CDFI funds website. So you can get access to the application on that website. So I just wanted to kind of close the eligibility piece with that and just talking a little bit about the process for applying. So as Jeff mentioned, an alternative to actually going through all of this and establishing or certifying your bank as a CDFI would be actually entering into a partnership with an institution which may be local, or even national, that is already a CDFI. And so, again, in this case, as Jeff said, you would not be seeking certification on your own. You would basically either be establishing potentially a joint venture with an entity that's already a CDFI, or just establishing kind of a partnership program in which you could just enter into an agreement with an entity that's a CDFI for them to provide some additional services to your customers. So, some of the benefits of that kind of program would be that, it would allow the banks to provide potentially an alternative lending platform to any of their customers that might not qualify for, let's say, financing through the bank's more traditional loan programs. If you have a partner CDFI that you're working with, then that could, be a referral source to allow your customers to still potentially apply for financing through them. So the bank can also provide, and the bank may also earn CRA credit if it makes investments in CDFIs. So a CDFI investment is basically kind of a safe harbored investment for a bank to receive CDFI credit. So you're automatically kind of receive your credit if you invest your funds through a CDFI entity. And so, that's of course, comes with its own benefits. And then finally, if you as a bank are partnering with a CDFI that might provide certain, wraparound or as Jeff was discussing, developmental services, those services can help your customers to actually become loan ready before before they then come to you actually for their financing. So you could partner with an institution that will provide those types of programs to help your customers, fix their credit or, in other ways become loan ready in order to apply for loans through your bank. So those are those are kind of just our basic requirements for trying to apply to become a CDFI. Jeff or Mark, did you have any other thoughts or things that you wanted to add in before I toss it back over to you both? The one thing I wanted to mention was, so we've been talking about the process for becoming certified as a CDFI. And so once entities become certified as a CDFI, then they would be able to participate in the programs that we have mentioned in this particular presentation. So that was just a question that was, or a point that someone wanted clarified. So Mark or Jeff, was there anything else you'd like to add? Otherwise, we can potentially open it up for questions if we have time.
Yeah, and one thing I would add is one thing to keep in mind is if you're wondering, there is an additional reporting you have to do to Treasury as a CDFI. It's an annual report that gets filed, I believe, October 1st, and that is the big onus by becoming a CDFI. But again, it may be a lot easier to become a CDFI and just do the annual report and get these benefits and access to low cost capital than it otherwise would be to forego seeking certification. Any questions?
Please feel free to put your questions in the chat if you have any. Mark, if you had anything you wanted to kind of add, please feel free.
Yeah, no, I'm sorry, I was on mute and forgot. And Jeff sort of answered the question I had, which was what are, you know, some of the downsides, which yeah, I think are the reporting obligations. And I see Jeff did answer that it was the postman that engaged his dog so loudly. So we got that question answered too. Are there any other questions? Either pop them in the chat or Stacy, I think people can take themselves off mute if they want to just ask the group, whatever's easier.
Any other questions for anyone? You should be able to unmute if you'd like or follow up with questions later. The only questions I saw you mentioned already related to the differences between CDFI and certified CDFI. Anybody else? And we will be posting the recording online along with a PDF of the slide deck, and I can also send it to anyone that would like that also directly.
And while we wait for questions, of course, you've probably noticed that in at least some of the financial awards, this is becoming, at least in some neighboring states, fairly common for banks to go and become CDFI certified. I think Mississippi has a whole host of banks, community banks that are certified as CDFIs. And so if sometimes what I tell clients is, you know, sometimes the best advice you're going to get on whether your bank should become a CDFI is just to pick up the phone and call a friend of yours who's a banker at one of the banks that's a CDFI and just ask them and just talk through with them the process and say, did you find this a valuable process and what benefits has it provided to your bank? And I think that's fairly helpful. And if you want a list of the CDFIs, the CDFI fund posts it and publishes it so you can Google it. But if you were to email Mark, Sabrina, or me, we'd be happy to provide you with a list of banks that are currently CDFIs, and maybe those conversations could be very fruitful for you.
Mm-hmm. And I also just wanted to add that, you know, we are seeing in our practice a number of banks that are partnering with either CDFIs or some newly created social impact investment funds to raise capital from some of the larger institutions and then deploy that capital in some of these same areas. And so I would just encourage you that, you know, if there are a number of ways to kind of skin this cat, right? And so if becoming a certified CDFI is not the right route for you, partnership with a CDFI or partnership with maybe a CDFI as well as a social impact fund to create the program or serve the community that you're looking to additionally serve could also be a route to accomplish that goal. And so it doesn't look like we have any other questions. So Stacy, do you want to go ahead and close this out?
Yep. I'll just say thank you to you all, Sabrina, Jeff, and Mark, for joining us from Nelson Mullins. And thank you all for taking some time this afternoon to talk about this subject. And we appreciate your involvement and your engagement. And I hope everyone has a great afternoon.
All right.
Thanks, everyone.
Thank you so much.